What is up, investors, and welcome back to the Everything Crypto Show, where we bring you the latest and most important news moving the crypto markets, DeFi tutorials on how you can optimize your crypto holdings to earn some juicy yield, as well as deep dives on projects we see as having huge potential for the future. Now, as always, please remember that nothing on this channel is financial advice, rather my own thoughts, opinions, and research that I have compiled and broken down for viewer education and entertainment purposes only, and I want this community to thrive, so please invest responsibly, and I love and appreciate you all. And with that out of the way, we are going to get right into today's breaking news content. So please grab that Tuesday morning cup of joe, sit back, relax, and enjoy the show. As what we were talking about today is the new Responsible Financial Innovation Act. Now, we have been waiting for this bill for quite a while now, as I have said that the United States is most certainly falling behind in terms of crypto adoption, innovation, and regulation, and it is finally here from Senator Cynthia Lummis as well as Senator Kirsten Gillibrand. So what we can do is click on the website here to go to the official document, and the full text of the bill is available here. And it is effectively 69 pages of new bills and regulations that are being proposed. And obviously, who wants to read through 69 pages of fancy legal jargon? That is why you are on YouTube, to get the most important notes, to get the summarized version, and to let you know what this means for the future. And that is exactly what we are going to break down in this video. So for starters here, this bill is called the Responsible Financial Innovation Act, and it is seeking to encourage responsible innovation by integrating digital assets into existing laws and providing greater clarity to an industry that is largely unregulated and lacks common standards and defining measures. And this is exactly what the issue with crypto has been in the past. Is it a security? Is it not a security? Is this taxable? Is it not taxable? So many questions, so many things up in the air. And what this bill does is bring a lot more clarity to the space that I do think will be seen as a positive moving forward overall. So for starters, we're going to talk about the SEC and the CFTC. Basically, it says here that the bill tasks the U.S. Securities and Exchange Commission and the Commodities Futures Trading Commission with the bulk of the work, as lawmakers strive to bring the broad cryptocurrency space under the umbrella of specific regulators once and for all. The SEC will regulate digital assets classified as securities, whereas the CFTC will be in charge of overseeing those that receive the commodity stamp. So right off the bat, what we are seeing here is that there will basically be two different sort of classifications for cryptos. Some of them will be classified as securities and some of them will be classified as commodities. And then they get into how they are going to actually differentiate between what is a security or a commodity, beginning with the definition of an ancillary asset, which is an intangible, fungible asset that is offered, sold, or otherwise provided to a person in connection with the purchase and sale of a security through an arrangement or scheme that constitutes an investment contract. So the legislation uses the Howey test to determine that an ancillary asset provided to a purchaser under an investment contract is not inherently a security. In order for a crypto to be classified as a security, the cryptocurrency must provide the holder with a debt or equity interest in a business entity, a profit or revenue share in a business entity derived solely from the entrepreneurial or managerial efforts of others, or any other financial interest in the entity. Basically, summarize what this means is that a crypto will not be classified as a security unless holding this crypto also offers you some sort of debt or equity interest in a business entity or entitlement to a part of their profits and or revenues. So digital assets that are not fully decentralized, which do benefit from entrepreneurial and managerial efforts that determine the value of the assets. And when they say entrepreneurial and managerial efforts, they are basically talking about the team behind these projects that are developing this. So digital assets that are not fully decentralized, which do benefit from these teams behind the projects, but are not debt or equity, or do not create rights or profits in a business entity, are not classified as securities, as long as these projects are actually filing their disclosures with the SEC twice a year, so they can ensure that the project is still running legitimately and not treating their crypto as a security. So the legislation here also grants the CFTC exclusive spot market jurisdiction over all fungible assets which are not securities, including ancillary assets. What this means here is that it's really not a matter of if, but it is a matter of when we will be getting a Bitcoin spot exchange traded fund in the US, as the bulk of the SEC's argument against it relate to the lack of regulation on spot markets and the reluctance of exchanges to work with regulators. So right off the bat here, one thing you can actually take away from what we've read so far is that Bitcoin is being defined as an ancillary asset. It is not being defined as a security. It is being defined as a commodity. So as we have predicted from the beginning, Bitcoin does get the green light check. We literally said it in the video from earlier today that I did predict this bill would be good for Bitcoin, as there are a ton of Bitcoin maxis that were working on it. And there you go. Bitcoin is safe. It is not deemed a security. Now, both the SEC and CFTC are directed by the bill to study and report on the creation of self-regulatory organizations that can basically play a role in working with regulators to continue the innovation in this market. And finally, this bill that came out today tasked the two watchdogs in consultation with the Treasury Security to develop a comprehensive set of guidances for digital asset intermediaries to think about cybersecurity. So basically, they're just trying to set some sort of cybersecurity standards for the industry. And given the amount of hacks and money that has been stolen this year alone from crypto, I do see this as a necessary step. Now, talking about energy, and this definitely comes up at a very interesting time, as New York did just ban proof of work mining. They are studying the power of consumption of digital assets, and the study will seek to determine the best ways to encourage innovation while still ensuring that these technologies work together with other areas of society to help the world move closer to climate goals through the development of more renewable energy sources and clean energy, as well as reducing energy waste. Now, taxes. This is a huge one here, and as previously hinted by Senator Loomis, the legislation will provide a tax exemption for capital gains that do not surpass $200 on a Bitcoin payment for goods and services. This measure encourages the use of digital assets as a medium of exchange. However, the bill notes that all transactions which are a part of the same transaction or a series of related transactions will be treated as a single transaction, therefore amount to a single capital gains number for the purposes of tax exemption. So basically, you can't just make a bunch of $200 purchases on the same item. They will all be taxed in one lump sum, so you can't kind of loophole your way around that by purchasing less at a time. And the bill goes one step further to declare that miners are not to be seen as brokers, and digital assets obtained from mining activities are not to be treated as income until they are converted into a fiat currency. In my opinion, this is a huge part of the bill. I do think what this does is raise some questions about staking rewards, and should those be taxed or should those be tax-free until they are converted back to fiat? I personally believe the latter. I do not think anybody should be getting taxed on staking rewards until it has actually been converted back to physical dollars, but that is just my opinion, and I do think it would benefit the crypto space as a whole. Now, additionally, they are specifying that digital asset lending agreements are not generally taxable events, similarly to securities lending transactions, and provisions that certain DAOs are business entities for tax purposes. However, this does require that a DAO is incorporated or organized under the laws of a jurisdiction as such. And lastly, on the taxation side, they are actually requiring the IRS to study and clarify issues such as forks and airdrops, merchant acceptance of digital assets, mining and staking, charitable donations, and the legal characterization of stable coins as indebtedness. Now, regarding 401ks, basically they're looking to analyze the opportunities and risks associated with investing in digital assets with retirement accounts. If this does actually happen, if Bitcoin does become widely available in 401ks, that is just a massive pile of money that is waiting to enter Bitcoin, in my opinion. Now, we have consumer protection, and in an attempt to enhance customer protections in the cryptocurrency markets, the bipartisan bill will require providers of digital assets to disclose information about their product, including source code versioning and the legal treatment of each digital asset. And more importantly here, the bill also grants the right to a person to keep and control the digital assets that they own. They are basically advocating for people to actually hold crypto in cold storage, to have true ownership of your assets. And this is one of the most important things on the channel that we have discussed on the beginning. So I'm definitely happy to see that here. And they're also including provisions on stable coins, such as requiring issuers to hold US dollars or dollar equivalents to enable redeeming by the customer at any any given time. And this is obviously in response to the whole UST scenario. And after this happened, USDT did also lose their peg. But what USDT did was they actually tweeted to remind customers that regardless of what is happening with the peg, they are always available to redeem their Tether for a 1-to-1 ratio through the Tether website directly. And that's what they're basically talking about here, is that stablecoins must always be backed by US dollars or dollar equivalents, as that is what makes stablecoins, well, stable. So she just ends it off here by saying that she thinks there will be a lot of momentum behind this bill. They have met with most of the industry stakeholders and experts of the field and are going to work with them over time to continue to improve the bill. So key points here, key things that you guys really need to take away from this. And number one is that now cryptos are going to be defined as one of two things, either a commodity or a security. Now, Bitcoin has gotten a free pass, and based on the wording of this article and how they have defined a commodity versus security, I also do believe that Ethereum does get a free pass here as well. So Bitcoin and Ethereum essentially have free passes. They are being deemed commodities, not securities. And if you are deemed a commodity, you are going to be dealt with by the CFTC, the Commodities Futures Trading Commission. And if there is a crypto that is deemed a security, then they will be dealt with by the SEC. Now, again, important to note that the presumption that an ancillary asset is a commodity can be appealed in court, meaning that if the SEC sees a crypto that is a commodity that they think should be security, they think it should be under their umbrella, they do have to take it to court, which clearly they are very good at doing, as they like to delay this XRP lawsuit quite a bit. But I do really like this differentiation here, but because what it does is it ensures that all cryptos are not going to be under the wing of the SEC, who clearly has no idea what they're doing in the crypto space and cannot be trusted. So now we have two different entities controlling two different portions of the crypto market: the SEC for the security side of things and the CFTC for the commodity side of things. We also see that because of this regulatory clarity with the CFTC, because Bitcoin is being deemed a commodity, this does also pave the way for a spot Bitcoin ETF, which once again should just allow huge allocations of capital into this spot ETF whenever it does go live. A huge buff for Bitcoin miners, a huge incentive here, as they will not actually be taxed on their Bitcoin from mining activities until it is converted into a fiat currency. So this does give them more flexibility to decide, what Bitcoin they do want to sell for profit and tax, and what they do want to continue to hold. And I do also like this clarity around taxes here for actual transactions through Bitcoin. So essentially, you will not be taxed on any $200 Bitcoin payments. And I do think that once again, this is very important to actually increase the fluency of Bitcoin as a medium of exchange. Now, personally, you will never catch me buying nothing with my Bitcoin. I would much rather use cash, which I do believe loses value over time. And while I, on the other hand, believe that Bitcoin does go up over time, that is my assumption, and therefore, I'm not going to use Bitcoin to pay for stuff, but this is definitely in high demand, so at least they are bringing some regulatory clarity surrounding this, so people can use it as a medium of exchange. Last but not least, the 401ks and the spot ETF, as we mentioned, should bring in some heavy capital, and the consumer protection portion of the bill, which does include some cybersecurity notes, as well as all digital assets to disclose information, including their source code versioning and the legal treatment of their digital asset. Most importantly, encouraging and granting the right and permission for people to keep and control the digital assets they own. Not that we ever needed the permission from anybody to get a cold storage wallet and own our own crypto, but the fact that they have recognized this is not a trend they can fight, and that one of the key beauties of crypto is in fact the true ownership of your assets. I do think that this is a positive sign overall. So these are the main things from this bill. It is definitely not as negative as I thought it would be. In fact, it's actually a little more positive. I do think that over time, these regulations are going to come into effect whether we like it or not, and we are going to continue to keep you guys up to date on all of the new regulation news as it comes out. So what do you guys think about these regulations? Are they good for the cryptos you are holding? Are they bad? What do you think about the differentiation and sort of like special treatment for Bitcoin and Ethereum, as they have been cleared as commodities? I want to know what you guys are thinking in the comments down below. And with that, I will catch you guys in the next one. Peace out for now.